Do you want to learn a moving average trading strategy that requires minimal time yet still get you winning trades? Welcome to 4Eyes Trader, where we give you the secrets on how to beat the forex market. If you would like to learn how to grow your trading account, make sure to subscribe to the channel by clicking the subscribe button below this video. Now, let's go through what we will be covering in the video today. Part 1, the setup. In this part, we will be talking about how to set up the indicator and the time frame required for this specific trading strategy. Part 2, trade filters. In this part, I will be showing you how to find trades with the highest quality. Part 3, entry signals and rules. In this part, I will be showing you how and when to enter a trade. Make sure to watch the entire video, as every single part is important to make this strategy a success. Now, let's get started. This strategy is something that I call the Hour Cloud EMA Strategy. We will be using the 50 EMA and the 200 EMA. EMA stands for Exponential Moving Average. If you have no idea what the moving average is, make sure to check out my previous video where I talk about what are moving averages. Now let me show you how to set your charts up. I use a software called TradingView for my charting purposes. They have free and they have paid plans. This strategy can be used on any of the plans. If you're interested, I'll leave a link to TradingView in the description box below. Let's open a new chart. Press on the indicators up here. Now search for Simple 2 EMA Cloud. It's created by a user called Ocklinator, so just insert that into your chart. Now your charts should look something like this. Press on the indicator name on the top left here and press on settings. Press on inputs and change the slow EMA to 200 and change the fast EMA to 50. Then press OK. Now your chart should look something like this. The line further from the price is the 200 EMA and the line closer to the price is the 50 EMA, and the area in between is shaded. That is what we call a cloud. And later in the video, I'll be explaining how we can actually use the cloud. Although we are using two moving averages in this strategy, we won't be using any moving average crossovers. And the reason behind that is because moving averages is a lagging indicator. Most of the time when the moving average crossover gives you a signal, it might be already in an unfavorable position, and we won't be getting the risk-reward ratio that we want. We will be using price action as our entry signal so we can get in the trades fast. The way I'm using moving averages is number 1, trend identification, and number 2, pullback identification. I trade this strategy on the 4-hour time frame. You can trade this on any time frame you want, but let me tell you the reasons why I'm trading on 4 hour. Before this, I was trading 6 to 8 hours a day on the 15-minute chart. One particular month, I was talking to my friend and we were comparing our end of month statements. My friend was only trading a single hour a day. When I compared my results with his return was higher than mine, although he had spent less time. That moment gave me sudden realization that I don't have to trade more to win more. I just have to avoid the lower quality trades. That is why I implement this strategy on the 4-hour time frame. It's normal for traders like us to have bad months. However, when the time investment is less, we won't feel as frustrated when we hit a break even or even have a loss. And what you have to remember is trading is a marathon and not a sprint. As long as you don't give up, you will find success. And now let's move on to the next part. For this particular strategy, we want to use it on pairs that are trending. If you have the ability to constantly find trending pairs and avoid ranging markets, you will have a higher profitability rate in forex trading because money is made in trends. When the market is ranging, a lot of strategies tend to lose. And when the market is trending, a lot of strategies tend to win. Now let's understand how to find trending pairs. Here are the criteria for identifying an uptrend and downtrend. For uptrend, price must make higher high and higher lows. The second criteria for uptrend is that price must be above the cloud. This is an example of a pair on an uptrend. How do we know it's on an uptrend? We can see that price is making higher highs and higher lows. Also, the price is above the cloud. Therefore, it satisfies our two criteria for an uptrend. This would be a trending pair that we can consider. Let's look at a downtrend. For a downtrend, price must make lower high and lower lows, and price must be below a cloud. Now, let's look at an example of a downtrend. So this downtrend actually made several lower lows and lower highs. Price is also below the cloud. If it fulfills the two criteria, it is a downtrend. If you're new to trading, this step might sound complicated to you, but trust me, in the near future, you will be able to glance at the chart and directly tell whether it's on an uptrend or downtrend very quickly. Now we have identified the trending pairs. now we want to identify our entry zones. For this strategy, we will be entering on pullbacks. Now let's talk about how the market works. The market moves in waves, goes down, up, down again, and up again. In this strategy, we want to get in when the price pullbacks. This gives us better positions that can give us better risk and reward ratio. So how do we identify the pullbacks? I personally use trend lines. How do you draw a trend line? Let's show you an example. Identify the previous major highs and lows. We want to find the points that can connect at least 2 touches. Then you draw a line to connect all these touches, and now you have your trend line. The price does not necessarily have to bounce off the 50 EMA, but you can take a look at recent historical pattern. Are there recent bounces directly from the 50 EMA or bounce when it's slightly further away? This will give you an indication of what might happen next. Once you have your trend line drawn, take note of these zones as they will be our entry zones. If you like the content of this video so far, make sure to smash that like button and feel free to subscribe to the channel, as it does help support the channel to allow me to make more videos like this one. Now that we have identified our zones, we want to wait until price reaches this zone and show a trigger candle. What are our trigger candles? Let me show you now. We are looking for strong reversal candles, which are engulfing candles and pin bar candles. Engulfing candles look like this, and pin bar candles look like this. Now I want to show you a few examples from the trade that I took this week with this specific moving average trading strategy. This pair is the Australian Canadian. I chose this pair because it showed me a very clear uptrend. How do I know it's an uptrend? It's because it's forming new higher highs and it's forming new higher lows. After I identified that, I drew a trend line and I waited for price to actually approach the trend line again. I waited for the trigger candle, which was the bullish engulfing. You can see the bullish engulfing here. That's when I placed my stop order for this trade. In just 4 candles, I took profit. This was another example of a trade that I took. It was on the Euro AUD. I saw this on the 4-hour time frame. Price was creating new lower highs and lower lows. So I knew that it was a very strong downtrend. This pair has actually been on a downtrend for quite a while. I drew a trend line to see where the price might pull back. The problem was I was going to sleep. I couldn't enter on a 4-hour time frame. However, I wanted to get in on a trade. I went to the 1-hour time frame to see if there were any openings to enter. The 1 hour showed a very strong bearish engulfing at that moment, and I placed a trade. The next day, it took profit. Now let's summarize our steps. Number 1, identify trending pairs. Number 2, identify your entry zone. Number 3, wait for a trigger candle on the trend line, either the pin bar or the engulfing. Number 4, enter trade with proper risk management, 1.5 to 2R. Stop loss can be above trigger candle or previous high and low. Risk management is something very important in trading, and if you want me to make a video about that, let me know in the comments below. So that's all to my strategy. Thank you for watching, and if you have any questions about this strategy or anything else about Forex, let me know in the comments below. And if you have any video ideas that you would like to see me make, let me know in the comments as well. That's all for today, and I'll see you in my next video.